Good afternoon, everybody. Welcome to the TraderMerlin show. It is your Thursday edition. I believe it's the 18th of August today. Hope you all doing well. Had a good trading session out there. We have surprisingly some positive market moves. I was expecting a little bit worse with some of the economic data that came out today, but it is what it is. We'll start things off with our economic data, and then I'm going to jump into the topic du jour, which was actually presented to me by Lee, one of our regular listeners. So Lee, thank you very much for the question. You spurred the topic, which is kind of a top-down, bottoms-up approach, which is best for market analysis. That's not for me to say. I know it works for me and kind of how I look at markets, and I'll share some of that with you today. Maybe it might help you in your investment and trading decisions. At minimum, a nice filtering tool for what to look at in these markets, and there's a couple resources we're going to look at to help out as well. All right, let's look first off with the economic announcements today. You had, start with earnings, Applied Materials came out with earnings today. Of course, that's in the chip making sector. 8.99% beat on their earnings. They're up 2.47% today. I don't really follow Canadian Solar too much, but they had blowout earnings. They were up 15%. You had Kohl's and Ross Stores both beat earnings, although both of those were down handily. Kind of interesting to see Ross Stores and Kohl's both beat. Kohl's down 7.72%, Ross down 0.8% on the day. And then retailer giant Estee Lauder, they beat earnings as well and were up 1.84%. But the real story for me is economic announcements. If you look down this list here, you can see that we had the Empire State Manufacturing Index for the United States look pretty weak a couple days ago. Well, today you actually have a positive number for the Philly, which is good, but it's still only 6.2. Remember, the way that the manufacturing indexes work is it oscillates above and below zero. So anything highly above zero is extremely optimistic, slightly above zero, mildly optimistic. So it's good to see some optimism there for the Philly Fed Manufacturing Index because the last two readings have been negative and they're expecting it to stay negative. Now, the big negative piece for me was a little bit further down that list, existing home sales, right? We expected it to come out at 4.87 million. That was a decline of roughly 300,000 homes being sold. Existing home sales came out at 4.81. So missed by about 60,000, which still isn't horrific, but I think it may be the beginning of a bigger picture downtrend here with regards to housing markets as we're hearing more and more about sellers lowering their prices, more inventory coming on the markets, and still this discussion of rates rising, although they haven't been skyrocketing recently by no means. Here is the 10-year, just so we can see a picture. The rates have been going up, but not that aggressive. Still, I would say in line with the downtrend that started back on June 15th. Bigger picture still says rates are rising. So that is still putting pressure on the housing market, in my opinion. We'll see what that happens going forward. But that's your major economic announcements for today. You can see up at the top, probably my biggest surprise was seeing that the EU, the European Union, their CPI numbers came out unchanged at 8.9%. Man, it just seems shocking to me they would only be at 8.9% because, as I mentioned on yesterday's show, you have the UK, you have the US, you have Australia, you have New Zealand, you have pretty much everybody except Japan is raising rates aggressively. The euro has not. They just started at their previous meeting. They did 50 basis points, so you kind of feel like they're a little bit late to the party. Therefore, it might be a bit more of a whip up with regards to inflation. Didn't see that today, which is kind of surprising to me. Anyway, is what it is. Let's dive into our topic. Actually, you know what? I'm going to look at the 7 markets. Why not? Let's just take a peek at what's happening with our top 7 here. Got hurt today on my silver. We have GC down pretty good on the day, 0.25%. It's been just a continual slow slide here. We've seen 4 consecutive days of down moves in gold. Again, my question is, are we going to 1750 or are we going to drop even further and make it down to the 1720 mark on gold before we see a little bit of a bounce to the upside? So that was your worst performer, down 0.25%. And from there, starts to look pretty decent. Here's your Dow Jones Industrial Average, which even though it formed a little bit of a doji, it's actually a really good thing because after this ballistic run-up, you would expect there to be a pullback. I had kind of earmarked this 33,255 mark on the Dow futures, thinking that's where the pullback would take us to. Now, it's not that we're out of the woods yet, but you kind of expected to see this sell-off a little bit more dramatic today. It was actually up on the day, 0.27% for the Dow, which certainly does not fall into my thought that we're going to have a bearish trading session. Now, there was bearish at one point, but didn't quite finish that way. So that's your Dow. Here's your S&P. Similar picture. I've got both these lines mapped out here that I think are still in play. That's 4,200 as a potential pullback point for the S&P, and also 4125. Currently, we are at 4288. So we got about an 88-point potential drop to get back to our most recent demand zone. But all in all, a pretty decent day after yesterday's slide. I really thought there'd be more follow-through today because of what happened yesterday, but we just didn't get it. So there still is definitely optimism out there in the equity markets and people shrugging off bad housing data as well. Don't worry, we got announcements tomorrow as well. All right, moving up to the NASDAQ. Again, same picture. This was a little bit more positive. It was up 0.34% on the day, closing at 13,538. Technically, story has not changed. Moving on to Russell, same thing. I do have that yellow box. I'm just going to leave that there because that's where I expect this to pull back to. But right now, we are sitting at exactly 2,000 on the Russell 2000. Gotta love whole number psychology. The Russell 2000 stuck at 2,000. Isn't that convenient? All right, Bitcoin. Well, finally, a little bit of, positive. We've had, and this is actually going to be in the new session because Bitcoin, it says up 0.6 for the day, but really, we've had 4 consecutive down days in a row. Not looking good. This ascending triangle kind of feels like it's been broken. Now, we haven't made new lows, so it still is, in theory, looking rather positive. However, I didn't want to see yesterday's trading activity break down below that blue line. So my confidence is waning slightly in the Bitcoin space, as our CIL students have talked about on Tuesday night and this morning. It looks great in the short term, but the bigger term picture is still bearish for cryptos overall. All right, got to have one real bright, shining star out there today. That's going to be crude oil up 2.15%. We talked about breaking those lows from early August. We did that, and then all of a sudden we're starting to rally back up. Who knows? We may test that recent supply zone at about 93.50 again. If it does test it again, then there is a greater possibility to break it, but the picture still is screaming downtrend. The recession is canceled, huh, Joe? It's over? Forget about it. We had according to the powers that be, we never even had one because the agency that declares a recession did not officially declare a recession. So pretend it never happened. It never happened. Keep on. Nothing to see here, folks. No recession. Oh, they don't just end like that. So we'll wait and see going forward what might happen out there with the recession. But I do not think it's gone and averted. Here's your dollar index on the day. Again, it was kind of weird to see the equity markets rally and the dollar rally like this as well. Normally, there is that inverse relationship. The fact that the dollar broke out of that little yellow box there, which I can now officially get rid of, bye-bye, yellow box, means, in my opinion, we're going to challenge those highs back at 109. If we break through that, you can talk all you want about recession. It's going to start to push these equity markets down. Strong dollar will have that impact on it. Looked good today. Real strong move up 0.78% for the dollar to 107.50. And then lastly, I just talked about those rising bond yields. It is moving back up, but it's not aggressive. It's actually rather slow move to the upside. All right, let's get to our listener questions out here today and get to the topic du jour. Lee asks, could you do a show on top-down and bottom-up analysis? Will it help my investing? Look, I think that the more you know about markets, the more you know about relationships and market dynamics, I think that that's what helps. Ultimately, what helps you most in trading and investing is knowing yourself, knowing your weaknesses, and how you respond under pressure. And basically, are you a methodical person that has a planned approach, or are you a shoot-from-the-hip kind of guy who's just going to end up being in a Robinhood trading account, throwing around $5 hoping you make $1 million, right? You can be that kind of gambler. So I think it all helps. I personally don't like to look at bottom-up analysis. For those who don't know, top-down analysis says, let's start with the really big macro picture of markets and then work our way down and find individual securities to potentially trade off of. Whereas a bottom-up approach says, I'm going to focus on specific companies and look at really what's going on with that one company, and maybe that might start to change the bigger picture. I personally think it's like looking at time frames. Do I want to start at the 5-minute time frame thinking that's going to change the world? Or do I want to look at the world and say that's going to change the 5-minute time frame? That's the quick Merlin analysis of top-down, bottom-up analysis. Will it help with your investing? I personally think it will. So here's the wonderful graphic I came up with for today. Yeah, I know, I'm such a wonderful artist. The top-down approach to market analysis. So as I mentioned there, I want to start with what the macro picture is doing. And I'm going to approach this from, let's say, an equity investor. For those of you who are futures, you could apply this to the futures as well, although it's not as streamlined because when you're looking at a top-down approach, you're generally looking at the big picture, macro. How's the whole world being impacted? Then how is a specific sector being impacted? And then how is an individual firm being impacted? So kind of those three levels that we're looking at. So what I would do is I would start by looking at the specific sector. So I'm going to use a couple of different tools out here. I'm going to start by looking at stockcharts.com. So I'll use stock charts just to do performance charts, and then we'll do a lot of real fun stuff with bar chart is one of my personal favorites. But stock charts, you need to use what's called a perf chart. And let's say I'm looking at the S&P 500. So I'm going to use the S&P 500 as my macro picture, right? That's the worldview. That's the market itself. So what are the major components of the S&P 500? Well, I would put those spider ETFs in here. So things like XLF, XLE for energy, XLU, XLI, XLB, XLK, XL, what else do I have in V? Gotta have healthcare in there. Oops, XLV. How about IYR? For real estate, so I've got 1, 2, 3, 4, 5, 6, 7, 8 in there. And I could add a whole bunch more. I just won't waste our time doing that. But what I want to do is I'm going to add in the last one. It's going to be SPY. And all this is going to do is show me the relationship between these guys and find out which one has been doing the best, which one has been doing the worst in relationship to the overall index. So the SPY is my axis, my reference point. So I'm basically comparing everything to the SPY right now. By clicking on that specific one, I can compare them to different securities, right? So here it's based off of the S&P 500. And right now, if you look at the closest mirror to it, it's probably going to be something like materials. Materials really feels like it's spot on there with the S&P. Which one's been the best performer? Energy. Okay, so I'll check out STEM later on. There you go. You want to know? You said look at energy sector? Why not? So in this case, if I'm looking to go long the market and I'm feeling bullish on the S&P, clearly the big winner out there has been energy. So from the top-down analysis perspective, the macro says what's the S&P doing, and then really what the sector is saying is which one's performing the best with regards to the S&P. In this case, there's no argument that energy is the best performer. If we go back, and you guys can change the time frame if you want. 200 days view or less time. Totally up to you, Lisa. It really depends on your style. If you want to, let's say the past 3 months, right? Let's go 90 days. All right, so there's 95 days. We could look at that and say that utilities is the best. But let's stay with energy just because. Hey, Big Ab, good to see you. Moving from Arizona to San Diego. Attaboy, come to the best coast, Big Ab. Next time I'm coming down, we're going to have a beer, buddy. I love myself some San Diego. So let's just say that in our top-down analysis, you said, okay, the macro picture, I'm feeling bullish on the S&P, great. Now I want to go find out which one's the strongest in relationship to that. So when the S&P does start to take off, or if the S&P does start to take off, like your analysis may conclude, then I want the strongest sector, right? The mistake a lot of people make is they'll look at something like this one down here, which is materials, and go, man, materials is so undervalued compared to the rest of the market that it's got to rally more. That's not true. Materials are weak for a reason. I don't know what it is. I don't particularly care. It's just they are weaker. Accept it and move on. So I'm going to go with the strongest one here. We'll call that energy, right? So now I've set the two first macro pieces, which is our two first pieces of our funnel. Big picture, I'm feeling bullish on the S&P for whatever reason. And that's, let me just be clear, I'm not saying that right now I'm bullish on the S&P. I'm just saying as a hypothetical, if this was your analysis, I'm feeling bullish on the S&P, then great, I'm finding the strongest sector. If, flip that to the contrary, you were feeling very bearish on the S&P and you thought that macro picture was much more of a downside move going forward, then what could we do? I'd be looking at materials because it's the weakest. If that's the weakest now, it will probably continue to be the weakest, so I'm looking for more of a sell-off there, if that makes sense to everybody. So, our next step, once we found that relationship and said, okay, energy is the strong one compared to the S&P, then what I do is I go over to bar chart, and I love bar chart for a lot of features, but this is one of my personal favorites. I'm going to just type in XLE. So you guys see I've got energy here, And again, most of the stuff is free at barcharts.com. They've got some pretty good subscription things as well. We're going to have John Rowland on next Wednesday to talk about his Friday TV show he's doing now for, got to copycat me, but John Rowland's going to be doing a Friday show for Bar Chart, so that's going to be pretty exciting as well. Who knows? Maybe I'll get to be on his show one of these days. But there you go. I'm going to type in XLF, and as you can see, it came up with the S&P 500 Energy Spider ETF. Now, I could find a lot of other ways to find the components of energy, but it's actually just really easy to pull up an ETF, especially the liquid ones, the majors, and then break down the components. And Bar Chart does an awesome job here. If I scroll down on the left side, you see a thing that says constituents. So I click on constituents, and it shows me all of the holdings of of XLE. Great. Now, here's where it gets really good. I can now click this download button right here, and if you're logged in, you can have a free account, no big deal. You just log into the free account and you can access this. Now, it brings up a list of the components. Come on. Where's my XLE? It was right there. This is not this. I did retailers earlier for fun. There it is. That's over on the wrong screen. Okay, so here is my list of all 22 different companies that make up XLE. Actually 21, right? So what I'll do, and by the way, just so you notice this, I'm going to make it really big for you, and I think this is an awesome tool, by the way, for those of you who want to learn the real nuts and bolts and mechanics of how things can be manipulated. Can anybody in here point out the two biggest vulnerabilities in the XLE ETF? Right? XLE has two major Achilles heels here. Now, there's 22 different companies in this ETF. But you can see that third column, it says percent holdings. So this ETF is currently made up 22.83% of ExxonMobil and 21.61% of Chevron. Together, that's about 44.5% of this entire index made up from two companies. That's not good in my opinion. It's vulnerable to those two, and they can certainly have, well, they're all going to be in oil. Remember, this is pretty much energy, so generally it's going to be oil. But just the weighting should scare you. And I think if you ever get involved with ETFs, right, I think one of the real simple things you can do is just go to bar chart. Let's say I want to look at, let's look at XLK. Or how about triple Qs? Let's look at the triple Qs. I'm going to go over here, go to bar chart. Here's the triple Q, NASDAQ 100 ETF. And I'm on constituents again, 13% Apple, 10% Microsoft. So just in those two, I've got myself close to 25% of the weighting of that entire 100 stock index is just Microsoft and Apple. That should very clearly tell you that there is a huge vulnerability, because if Apple takes a nosedive, which it won't, because at this point it's just too big to fail, it's in too many portfolios, it's just too damn big. But if it did, this could create a huge sell-off in the markets. It really starts, in my opinion, from the overweighting, like from Google on. Because, you got Google and Alphabet, but that's roughly 7.7%. And then you have Amazon is roughly 7%. Tesla coming in about 4.6%. So just something to, make you aware. A lot of times people don't know what makes up these indexes, and you think it's actually fairly evenly weighted. No. I mean, look, I'll go down to this NASDAQ 100 list here, and you're like, ooh, NetEase and Skyworks are in the NASDAQ 100. They make no impact. Skyworks is 0.14% of the entire index. I mean, that thing could drop 99% today and would barely even have an impact on this index. However, if we had Apple drop 99%, this thing is plummeting, and the whole market will probably sell off with it. Tom says, looks like the Dow overload with the gadget maker and web hosting company, Apple and Microsoft. Well, let's do that one just for fun as well. Let's look at the diamonds, right? It's going to be a little bit better, but still, Dow only has 30 components, right? So, United Health Group, this looks better and safer to me, and this only has 30 components, whereas the NASDAQ has 100. Yes, United Health Group is the biggest at 10.5. That's still big, but notice the next drop down, it's 6, and then we have kind of a slow taper down. And the weakest one in there is Intel at 0.7%. So the Dow is hands down far more balanced than some of these other indexes. Now let's look at spiders, because we now have 503, it's S&P 500, but there's 503 constituents, I believe. And notice even that is fairly heavily weighted in Apple and Microsoft. but then starts to taper down and much more evenly distributed. But right now, if anything severe were to happen to Apple or Microsoft, this whole market is going to implode. It's going to be crazy. Anyway, you can use bar charts for that. Again, I believe you get 5 downloads of the entire list. Now, why would you want to download this list? Well, I'll show you. It does show very clearly how the entire economy... Yep. Oh, yeah. It's real scary, Joe. And it's not even 50 companies. I would say 10. That's what... you put your faith in just a few companies. Granted, they're awesome companies. I mean, Microsoft isn't everything. So is Apple. Apple's everywhere. But yeah, it is scary. So here's the next step that I like to do. And I've done this for years. It's one of my favorite things to do. If I have now analyzed that market and I said, okay, for whatever reason, I'm feeling bullish. I want to go with the strongest sector at this moment. That's going to be energy over the last 90 days. Great, because I'm a trend trader. We talked about that with the swing trading strategies yesterday. What do you want to be? You want to go with the trend. Trend is your friend to the bend at the end. Find the strong ones and go with it. Okay, now that we got that settled, I've got all 22 of those energy stocks right here. So what I like to do is I can copy those out. I'm just going to highlight them. I'm going to go Control C. And in TradeStation, I have a lot of different watch lists here, but I'll create a new one here just for fun. Let's go Insert, and I hit Paste. And now I have all of those. So if I wanted to, I could very quickly start to run through the different markets to see what looks best, what looks weakest, because within that sector, there's going to be leaders and laggards as well. So this should have changed over to a daily time frame. Something is just wonky with my platform here today. I love TradeStation. So there's an easy way for you guys to do this if you don't have a TradeStation account. I'll show you real quick. Since I copied those over, let me bring up that spreadsheet one more time. So there's those 22 I've copied. And if I go to stock charts, you can actually do that perf chart thing again. So here is the perf chart. I'm going to paste them all in. Now, it won't bring this up. This won't work like this. You have to put commas between each one. So it's kind of a pain in the butt to look at 22 companies, all at once. But I'm just going to real quickly put commas after each one of these for you. So you got Phillips 66, Devon Energy. I mean, you got all kinds of different companies in here. Some are oil, some are alternative energy, but most are going to be in the oil industry. And I'm almost done, guys. I'll do it. Marathon's the last one. I'll delete everything after that. Okay. So now I hit enter, and it's going to look like an absolute mess. However, if we were setting this for the last 90 days, which let me adjust this chart back to 90 days. We were at 95. There we go. You can see that even out of the energy index, which was clearly blowing away the S&P 500 rate of returns, far better than the S&P, you can clearly see that within that sector, a few of them are much stronger than others. So right here you can see Schlumberger down looks to be about 9%. Well, that's not good. Then you look up here and you say, what's this bad boy right here? Marathon Petroleum, MRO, up 18%. So now it's much easier for me to go, okay, big picture says go long S&P. The individual sector, which was energy, is the strongest within the S&P. So I'm saying positive on S&P. I'm looking for the strongest sector within the S&P, which is energy. Now I'm looking at the strongest firm within that industry, and that locks me into MRO. Now, of course, that does not mean that we need to run out there and buy Marathon Oil, but we can type in MRO, bring up a price chart of it, and now start to make trades based off of this, right? You could basically say, all right, I see that it's forming higher lows. Maybe I'll go long Marathon if it gets above $25 because I need it to break this pivot high. Okay, great. Now we can start, and by doing that, you already know you're in the strong stock, which is in a strong sector, Now, if the market is rolling over and going down, we could do something completely different. Let's see, what does this say? In TradeStation, you can put in the S&P real strength and weakness indicator on your radar along with symbols, then resort by strongest over less. That's pretty cool. I know TradeStation has some really, really cool features. I just know that a lot of people don't use TradeStation because of its cost and other issues with TradeStation. So I was just kind of showing how you can import very quickly, but most people are probably going to be using external sources. Now, you can import watch lists into TradingView as well. sometimes I think you have to have a premier prescription or a higher end subscription to be able to import watch lists. But thank you, Liz, for that one. For anybody who's a TradeStation user, there we go. So that is the basic approach to it. Now, let's just say we thought the exact opposite, just so I can play devil's advocate. And I can say, okay, I think the markets are going to tank. They don't look good right now. I think things are going to crash. Okay, fine. Well, what would I want to be shorting? Which one looks the weakest right now overall in the market? So I'd go back to our initial setup over here, and I would bring in the same thing. We looked at S&P and all those different sectors, and it was XLB was the weakest performer, right? That was materials. Okay, fine. So if materials is the weakest performer, I can go back to bar chart, type in XLB, find out which of the materials stocks I'm looking at. Holy cow. Look at this Lindy. I did not know it was that heavily. 17% of the index is in Lindy PLC, LIN, which I'll be honest, haven't even heard of. So I'll download this one. I only have 2 left. All right, here I've now opened up my watch list. Don't save that one. All right, so there's my energy or my material stocks. There's 28 of those. And I'm going to do the same thing I just did. And it may be a little time consuming for some of you, but it's just, it's just practice, just repetition. There we go. I'm going to delete some of the last ones because the tail end have the least impact on the index. But let me just do a few here. Is it big in New Jersey? Huh? It's funny. I've never heard that name. I've been trading for 20 plus years and I never heard of Lindy. Huh. You sure PLC usually means foreign company? Maybe they have a subsidiary. Anyway, we'll just do a couple more here and I'm going to delete the rest. Oh, I got to have Marietta. Okay. So let's delete everything else on here. We don't need all of them, but just as an example. So, wow. Now let's go over the last 90 days. Like we've been doing, right? Again, whatever time frame you're looking at, you could do the analysis on that. So there is 95 days like we've been looking at. And if I'm looking to short, boy, the weakest one out there has been Newmont. Wow. Looking real bad on old Newmont. Newmont and FCX. All right, so Newmont is still drifting down. So let's look at Newmont. Where was that? And I'm going to put in Newmont into TradingView. So if I'm thinking, again, I just flipped the hypothesis and said, hey, I'm bearish on the markets. I'm looking for the weakest sector, which is materials. And I'm looking for the weakest one within materials, which is Newmont. Goodness, this is an ugly, ugly chart. Down 50% off its highs just from April. Wow. Ugh. Now, I'm just doing that analysis, and then I will also very quickly explain why I would not probably be shorting Newmont. At this point, it would be logical to think that it would still continue down, especially if the markets rolled over and started to sell off, then materials would probably drop even more, etc. My only problem is with Newmont. I mean, this is a major company that's down 50%, and it's materials. I don't think we're going to stop using less and less materials. So to the short side, I would say the top-down approach for me, at least in the past, has been a little bit shaky. What I really love it for is the bullish side of things. So if I'm looking for long plays, I want to see what's the strongest, because generally the strongest will continue to move higher. Again, the trend is your friend to the bend at the end. So that is my view on that top-down approach to market analysis. I try not to overcomplicate it. Now, I could add a higher level on here, which would be what is the kind of the macro fundamental view, meaning what's GDP, CPI, inflation, interest rate, bond market yields, what is all that stuff saying about our market going forward, and how might that push down the macro picture? And when I'm looking at macro in this diagram, my perspective is that the macro is the market index. The S&P 500, the NASDAQ, the Russell, whatever index it is that you're using. So, Lee, I hope that helped a little bit in the top-down approach. I think it can certainly help you. The best thing I think that it does for me anyway is it makes me just more aware of the strength of the market, of different industries and sectors, and then the names within those sectors. Now, I don't trade a lot of building material stocks. I've traded some MLM before, some Freeport-McMoRan, some U.S. Steel, but not my area of expertise. If you get me towards technology, I trade those a lot more. That's actually there was a period of time back in the late 90s when I was trading KLA 10 core. Oh, the old CliK. KLAC, right? Didn't really know about their business per se. Like I wasn't watching fundamentals or anything like that, but this was one that was constantly a big mover and a leader back at that time. And so I ended up just trading this thing. I was just my regular go-to. There was a weird period of time from 1998 to probably 2004 where I would literally trade the same stock every single day for about 2 years. And I don't know why, but after 2 years, it always seemed that it just stopped working. And my attitude was, if it stopped working, then move on to something else and find something else to trade. And so I traded E-Trade for 2 years. I traded Exodus Communications for 2 years. I traded Juniper for 2 years. I traded Broadcom for 2 years. It was kind of interesting seeing how I would trade those things, and you just start to get to know them. But how did I pick those ones? Twofold. Number one, they were the strong ones at the time, and B, the ones I was making money with. And maybe those things go hand in hand. If something's the biggest winner and I'm going long those, good opportunities. So hopefully that helps you out, Lee, and others that might be looking for some resources. I think that the download feature of the watch list here on bar chart is awesome. You can do it for almost anything. I mean, there's, for example, people always talking about, what is it called? BLOC. No. There's a Hive block. There's a blockchain ETF, and I cannot remember it off the top of my head. One second. I'm pretty sure it's a Dab-nabbit. I can't seem to bring it up over here. I thought it was BLOC or BLOK. There it is. So here's one just out of curiosity for everybody that's watching. You hear about these. Here's BLOK. This is a transformational. Basically, they're saying this is a blockchain cryptocurrency. So, when I hear blockchain crypto, I'm thinking, ooh, this has got Bitcoin, Ethereum, Litecoin, Ripple, all these great cryptos. None of that. Look what they've got. MicroStrategy, Silvergate, Overstock, Accenture. Really, you think Accenture is a blockchain company? IBM. Coinbase. You got Hive Blockchain, Hut 8 Mining. So there's a few in here. But CME Group. This is not blockchain, guys. So a lot of times dig into what you're actually buying, and it may surprise you, not only in the lack of diversity of instruments in there, but it may not even really be what you're interested in. Last year, 2 years ago, when I switched over from Power Trading Radio to this show, I did something on electric vehicles. And it was really interesting breaking apart all these electric vehicle ETFs, and a lot of them weren't even vehicle companies. They were just, somebody who made chips for vehicles or made sensors or things like that. It's like, well, I want to buy a car ETF, but you're selling me, the lighter manufacturer. It's weird stuff. Isn't trading the same stock every day a bit risky from a wash sale rule perspective? Yeah, but if you are registered as a securities trader, which in my tax definition, I'm a securities trader, it's called a trader tax status. There's no wash sale, so I don't have to worry about that. For anybody else, yeah. I mean, and Liz, if you go back to those days, I was doing 550 trades a day, so definitely the wash sale would have killed me if I had the wash sale rule back then. But luckily, I was declared trader status, so no wash sale was not an impact for me. Jimmy T says, Mara. What about Mara? Mara's on the list. I think I saw Mara in here. Maybe not. It should be. Yeah, they don't even have Mara on this one. Marathon. Oh, there it is. Marathon Digital Holdings. 3.34% of this ETF is Mara. So anyway, I just think it's a great resource for you to learn more about what you're actually buying. And I hear people all the time tell me, I bought this, I bought that. And a lot of times they don't even know what they bought. The funds they have are not in those specific ETFs. Or the securities they're looking for. Let's see. Katut, you mentioned something earlier. You said let's look at energy. So we kind of did look at energy, but I'll dig. And you asked STEM, huh? Let's go look at STEM. All right. STEM, New York Stock Exchange. Really rather new one, only a year and a half old. Almost a year and 3/4. I would say it's looking really good because it's turned the corner. You've seen me talk about this so many times. The trend is your friend till the bend at the end, and we have broken a pivot high. You actually have a couple, but one, these two dotted blue lines are kind of key points for it to get above. First one down below, right around 988, was great once it crossed that. And then, you're looking at this next pivot high, which is 1260. It's ripped through that, and it's actually hesitating at its most logical stopping point, which is right around 1630. All in all, it looks good. I kind of expect there to be a pullback. You usually don't get big moves like this without having a pullback in it. But if it starts to rally back up, you're looking at 1920s. You're probably looking at closing this gap to right around $25. So all in all, looks good. Just don't get suckered in by a big, strong move like this. I would wait for a pullback into an area of demand and then go from there. IBM and Accenture are consulting firms. Yeah, I know, but IBM always seems to, if there's a new technology, it's always like IBM's in there, but I don't see them being a blockchain company per se. What I want is I want to be in the actual cryptocurrencies that are making up those blockchains, those layer one technology we talked about, things like Ethereum or Cosmos, right? We looked at Cosmos today. It was kind of interesting. We're hopefully getting 20% staking rates on Cosmos today by doing self-staking through Ledger, which was kind of fun. Let's see. I want to get to two other questions. That one was from Lee. Since I'm on the topic, I don't know if I addressed this yesterday. Maybe I did, maybe I didn't. But Darren says, Merlin, you mentioned recent pessimism in the crypto space. Would you elaborate on that comment, please? Well, I guess overall you have this giant dark cloud hanging over cryptocurrencies because of what happened back in May with the unpegging of stablecoins. So you had the UST stablecoin depegging, pretty much going to zero. That brought down Terra Luna with it as well. So they kind of went hand in hand, 90+%, $40+ billion evaporated in 72 hours. That ripple effect is still going on. So if I have an earthquake, and let's just say that what happened with UST and Luna is an earthquake, right? That was a 9.0 on the Richter scale. Boom, it shocked everybody in crypto. Do you think that it just shakes real quick, those two companies take damage and it's all fine? No, there's aftershocks. And when something's that big, there's aftershocks that are felt a long ways away. And in the crypto case, what you had was obviously UST and Luna collapsed. But because of that collapse, there was all this tertiary damage that happened, aftershocks, if you will. So you had Celsius go under, you had Voyager go under, you had BlockFi go under. Why? Because they had exposure to a company called Three Arrows Capital. Three Arrows Capital had had money invested in everything, including Luna and UST. So when that goes down, I believe that there still are other aftershocks that are coming out. And what I'm seeing, and I'm encouraging with my students in the CIL, is pull all your money off of any exchange, pull all your money out of anything unless it's staking directly, and get control of your own keys. Right? If you can, get your crypto off of Coinbase, get your crypto off of BlockFi, get your crypto off of any place that you can, and go to self-storage. Get yourself an Nano Ledger or a Trezor and keep it in your control until the dust settles. Because I still believe we're going to see companies go bankrupt. I believe we're going to hear all of a sudden somebody go, hey, yeah, we had exposure to Three Arrows Capital and we lost $200 million too, and we're going to have to freeze company assets. You just saw it with Hodlnaut out of Singapore as well. This was one that was like, no, we have no exposure. No, boom, they just froze all their clients' accounts. Thank goodness I had no exposure to it. But that is the pessimism that's out there, and I think that it's still lingering. The recent moves that have happened with Bitcoin, and I'll just show you that chart here real quick. They've definitely been great. It's nice to see the positive moves up. Obviously, that reflects optimism in the crypto space, but it's not a convincing move. It's just slowly drifting up. In my opinion, you look at this downtrend, that's what's more important. We are still looking at that big downtrend. This is just basically a pullback. We'll have to wait and see what happens if we get above this downtrend line, hopefully get above 32, maybe 33,000. Then it's back in action and we'll see things move up. But there's a lot of pessimism. So what ultimately happened is money came out of a lot of different assets and moved into stable coins, right? You saw a huge amount of money pour into stable coins recently, which is great. That's great. Because what it means is money didn't leave the ecosystem, it just went to cash. And what will ultimately happen is when the risk on event happens, when we can start to see this market stabilize and the trend is back to the upside, that money's coming out of those stable coins and will flood the crypto market and we'll get another boom. So it's just kind of this weird, they call it crypto winter, but it's not just crypto winter. It's crypto winter with, this UST and Luna issue. You also have a lot of issues with stable coins. There were a couple stable coins this week that depegged, and that is, creating nervousness around stable coins. So that's what I mean by the pessimism in the crypto space there, Darren. There's obviously a lot of other elements to it, but that's the general sense there and things we covered in our CIL class. Miners going to capitulate more? Yeah. I mean, why wouldn't they? I mean, you look at Marathon. It's had a huge run-up, right? It actually looks like it's back on its feet and going to be making an uptrend here. Looks good so far. But remember, a lot of miners are mining Ethereum, and that's all going to change on September 15th. It all goes away. Let's go to Riot. While the trend looks good, I still wouldn't put my money in miners. Last one here, and then I'm going to wrap. What time we got? I got to wrap up here. Let's see. This is from OG. OG, I think you're here today. He says, does anyone use a chart for individual options contracts? I just started paper trading, buying calls and puts, and it seems to be going well enough just charting the stock and keeping the panel open with the current price of the contract info, the contract you're in. I don't look at that, but I'm actually going to bring on a guest maybe next week. I have to reach out to him today. I've been trying to get some of your guests on the program. I finally found some time to reach out and talk to people. I'll probably have Ryan Watkins on in a couple weeks. We're going to have John Rowland on next week. I'm trying to get Tim Pessett on the program. I'd love to have him on. And then Corey Lane will be on the program probably next week, maybe a week after that. And he does a lot with charting of options. So does Sean Reed. Sean Reed does some really cool charting of the actual price of the options contract and uses that to make his trading decisions. So we can talk more about that when those guys get on the program. But there's definitely some people out there that are using charts of the options themselves. I personally don't. Tom says, I chart 4-leg options all the time. Easy in Thinkorswim. Yeah, and Thinkorswim is probably the best for that. Remember, Thinkorswim was built specifically for options trades. It really was not designed to be other assets. It's grown to trade other assets, but it really was built to be an options trading platform. So they are probably the best out there. And Corey will show us, how to get charts there, what kind of settings you might want to look at for looking at charts of your specific options. Cool, Darren. Hey, well, thanks for sending in that question. For anybody out there, if you have questions you want answered, the easiest way is to put them down below the YouTube video. Just go to whatever YouTube video it is and just type in your question, comment, feedback, whatever there, and I'll get to those questions. Is Sean Reed the one that has the shopping for premium OTA class? Yep. Peddling for premium, I think it was. Yeah, it's great. I was a fly on the wall in his class a couple times, and man, he's kind of what I mirror my style, not my total style, but one of my strategies is off of, right? Just collecting premium. Just bring in premium, get that money inflow, and be as consistent with that as possible. I love it. I love it. All right, let's see. Economic announcements and earnings for tomorrow. Let's start there. It's going to be a little bit quieter for tomorrow's session. You can see here, 8:19. We only have 4 announcements tomorrow, and really nothing that's that major. You have mortgage delinquencies in the U.S. 4.11% was the previous month. Curious to see if that spikes. If you have a surge in mortgage delinquencies, that obviously puts pressure on the housing market and potentially the financial markets going forward. For Canada, you got retail sales numbers coming out. They're expecting a pretty significant contraction in their retail sales numbers tomorrow. And then it's about earnings. Oh, I always do that on the wrong screen. We don't want to do that. Here is your earnings calendar for tomorrow. You've got John Deere, Foot Locker, Vip Shop. No clue what they are. Anglo Gold, Ashanti, and The Buckle. So those are your major ones reporting earnings tomorrow. There are a lot more than this, but I just kind of cherry pick the major or bigger names that are in that space for the market. I think that's going to do it for me. I'm actually going to get out here in a 44-minute show. Take that, Big Eb. Neener. What do I think of? I don't really follow any SPACs right now. I'm over it. I'm done. After I had my issue with, I can't even remember that damn SPAC I was in. Luckily, I made some pretty good money, but you guys might remember I did that special on SPACs 2 years ago, and I was like, is it a blessing or a curse? And that whole blank check concept where you can give your money to somebody and they can go out there and buy any company they want and make them now public, that sounds great. But as the person who runs, here's why I have a problem with them all, and I've mentioned this before, but let's say you guys all buy into my SPAC. I have a specialty purpose acquisition company, a SPAC, and I, in my profile, say, I'm looking to buy blockchain technologies and be a front runner in the crypto world by, being innovative and buying blockchain companies. And I say, okay, it's $10 a share. So you guys all start pouring money, and I'm getting rich off it because y'all are buying my SPAC. So I now have 2 years to go find anybody. And what I could do is I go find my buddy Tim, who's a good computer programmer, and say, Tim, I need you to get 2 other people. We'll rent a little office space, and you guys just tell me you're making a great project. You have this huge blockchain project coming out, and blah, blah, blah. There it is. It could be a totally bogus company. And I'll go to Tim and say, listen, if you get 5 employees and you just sell something, I'll buy it from you from another account so it looks like you actually have sales. And then what I'll do is I will buy your company and bring you public. And I'll bring you public at $100 a share. And we'll sell 1 million shares. So it's a $100 million deal. And he's like, oh, okay, let's do it. And then we walk away with all the money, and the people who bought those shares get screwed because there's no oversight to it. To me, that's what a SPAC is. And I've seen more often than not, they pay way too much for the company, and as soon as they switch over, boom, it comes crashing down. There's dozens of them. So let me look at that one now that I've been brutally rude about SPACs, and I won't touch them. EGHT. Well, 8x8. This isn't a SPAC. I don't think this is a SPAC. It shouldn't be because it's already public more than 5 years. So remember, most SPACs are only going to be 2 years. If you are interested, you can actually go to a SPAC calendar. And there's a whole bunch of them out there. Here's SPAC calendar of events. Oh, no, that's Live Nation. There we go. She just described Facebook. Yeah, but Facebook actually had a product, Joe. And, they did really well. So, let's see. Here's FVIV. I have no clue, never heard of FVIV. But here's generally what they look like, right? They do their IPO at $10. This guy's got no liquidity. You can actually, this is Fortress Value Acquisition Company. They made a whole bunch of money selling those shares, and they're going to, at some point, try to acquire something else. And, I don't know. I think, let's see, B. Yeah, here's the one that I was in. So you can see the SPAC. When I was talking about on the show, I was long at $15. Oh, I even have my lines on here. 15.04 was my average price. And it just kept dropping and dropping. I was like, guys, I'm going to hold it. Because they were talking about buying Bakkt, which was a private company. And Bakkt was telling the world that they were going to be the clearing firm for institutional crypto trades. And I remember that vividly because for me, that's the golden ticket. Coinbase and Kraken and Binance, that's all fine and dandy. But if you're the one who's clearing for Goldman, Merrill, Schwab, all the big guys, cha-ching, that's the big money. And I was like, I'm buying into that. I fell for hook, line, and sinker. And, unfortunately, it had this huge news here where it popped from $7 and jumped up. And this day, I sold it at $17, so I made $2 per share. Had 1,000. I made $2,000 on the deal. But man, it ran up to $51. I'm so irritated, but look at it now. This is what most SPACs look like. It's trading at $2.94. How about another one? LCID. There's another SPAC. Now this one's done much better, right? Lucid Motors actually delivering vehicles and looking decent, but I don't know. Personally, I stay away from those. I just think that they're just too risky. How about Richard Branson's multiple SPACs? One was VGAC. I haven't looked. I know he had a few of them. Let's go VGAC. So it's not there. I'll tell you this. I think that Richard Branson probably didn't. I don't think that he particularly himself had a SPAC. I'm pretty sure that it was somebody in his organization was like, hey, let's do some SPACs and he put his stamp on it. Yeah, it's shady stuff. I don't know. Personally, I'm over it. I think it's a fad that was going around. I think that it's just a really, really risky thing. It wasn't Nikola a SPAC? We can tell by looking at the chart. Yes, so Nikola was a SPAC as well. They had their huge surge up to 90. I wish I could go back and have the time to go and clip my shows because, there you go, Zed. It was SPCE, right, space. I wish I could go back and look at these shows because I remember when this thing was up at $75, I'm like, short Nikola, are you kidding me? Short it. And now it's at $6. If only I followed my own advice. Man, that's ugly. SPCE. Thanks, Ed. Yeah, here's another one that was a SPAC. Yeah, this was at $10, which generally seems to be the price they all start at, and rallied all the way up to $62, and now you're down at $6. And what I'm worried about is people will see this and go, oh, it's at $6. It was at $60. Man, that's a 10x return. I should buy some right now. So nope, I wouldn't touch it. Leave it alone. All right, everybody, that's going to do it for me. I got to run before I get sucked into an hour show, and then Big Eb can gloat about how we got an hour show today. I'm going to go out and enjoy some sunshine here. Tomorrow is Friday, so I saw that nice little contribution from Chase. Thank you very much. I will definitely put that to use tomorrow. I will be having a nice glass of whiskey on tomorrow's show. So anyway, those of you who enjoyed the show, give me a little thumbs up. If you didn't like the show, that's great as well. You can email me at TraderMerlin@gmail.com and tell me what you did not like about it, so maybe I can make improvements to the program, the content. Obviously, I'm working on my appearance because I look like absolute crap today, and I'm working on getting this camera running. Hopefully, I can have that all set up by Monday, but that is my Thursday edition. If you want something specific covered tomorrow, put it down below the YouTube video. Any one of them is fine because I look at the control panel. I'll see all the comments that come in. So thank you guys so much. Have a fantastic remainder of your day. Be safe out there. It's going to be a fun one on Friday. Take care.